This is Taking Stock on Bloomberg. I'm Pimm. We're talking about the European debt crisis and the role of the European Central Bank as it faces three issues: the financial interests of its member countries, promoting economic growth, and trying to keep inflation under control. So how can the bank and its incoming president, Italy's Mario Draghi, maintain this balance? Well, for more, we have Nobel laureate Professor Robert Mundell from Columbia University, and also with us, Mark Dow, portfolio manager at Pharo Management. Mark Dow was an economist at the International Monetary Fund and also at the U.S. Treasury Department. Mark, good to have you with us. Thanks for joining us.
Thanks for having me.
Professor Mundell was just describing the situation now that Mario Draghi, while maybe not, there is no perfect candidate to head the ECB, that he's concerned that Mario Draghi might be too willing to tighten, that might be too willing to try to prove his credentials, perhaps, and increase interest rates. Are you concerned of the same thing?
I'm not overly concerned, but yes, I think that risk exists. The Italians have a reputation in the European system as being lax. Mario Draghi is anything but lax, but nonetheless, there will be an inclination on his part to show them that he's every bit as tough as they are. But I think he's an excellent choice. There's no one better out there.
Professor Mundell, right now there is a group of analysts from the International Monetary Fund in Greece trying to assess the country's compliance with previous agreements to lend the money. Do you feel that having Mario Draghi at the head of the European Central Bank is going to change the bank's perspective as for Greece's compliance?
I don't think so. I don't think in any way that's going to make any difference.
He won't be more lenient?
No, no.
And will he be able to keep this coalition of various countries together?
I think lenient is not. I think, of course, what Greece has to put in place some definite steps that are showing they're making real progress on this. And I think and everyone thinks that in the long run, some kind of big concessions are going to have to be made, restructuring of some kind in Greece. But I don't think it's a good idea to do that early at the stage before Greece has made more of an effort.
Mark, do you think that Greece is going to be able to comply with some of the directives in order to get the money from the ECB as well as the IMF?
My guess is that in the short term, all along I've been in the camp that Greece mathematically has to restructure its debt, right? And I think the most likely path will be an orderly restructuring rather than a disorderly one. But you can't exclude 100% the probability of a disorderly one. What Greece needs to do in the short term is comply enough to get the IMF program back on track, get the financing set up. And then the Europeans have to worry about the rest of Europe, because eventually Greece is going to get restructured, probably Portugal too, and they have to make sure that the firewall around those countries is robust enough to keep the fire from spreading to Spain and the other core countries. So in that time that they buy from themselves, in this final gasp of air, they need to go back and work very hard on capitalizing the banking system in Spain and fixing the other problems they need so that when that moment comes, the risk of contagion is as minimal as possible.
Professor Mundell, come in on this topic, because while that may sound theoretically very possible, we know from elections that took place in Spain over the weekend that the populists may have very different opinions about what's going to happen.
Well, I think that may be the case. Here's where I think you see the European Central Bank has got. I think when Trichet is leaving. Of course, I think he's raised interest rates again. I think that he's moved in that direction. I think that that's not the way for the European Central Bank to go. I think that just having a strong euro is going to weaken all those countries unnecessarily. I think it would be better to let the euro drop to 130. Remember, there was a time when the euro went above, and this was about 4 or 5 years ago, when it broke 130. Trichet called it brutal, hard for competitiveness and so on, and yet it went way up to 164, and then it went down to other things. But I think the instability of the euro is not a good thing. I think it would be better to keep the euro down at some level of 130, and that would be better. Now, of course, the question of inflation is there, but I don't think this constant immediate obsession with the current rate is the crucial thing. I think that over the long run, they have to keep the inflation rate low, but it won't matter if the inflation rate goes up by 1% or so.
Mark Dow, this seems to be the same kind of confrontation that we have here, at least in the Federal Reserve, worrying about inflation on the one hand, although Ben Bernanke says that's tame for now, yet we're also trying to promote growth. And is it difficult to do both at the same time?
No, it's very difficult, but the setups are different as well. In Europe, their mandate is focused entirely on inflation, and the way they measure inflation for the purposes of monetary policy contains a lot more of many more of the transitory elements that can make inflation a lot more volatile. So sometimes they respond to false positives more than the Fed is likely to do. If you remember back in 2008, the ECB raised rates, and the Fed said no, core inflation is not confirming what headline inflation is saying, so we're going to stay on hold. And the ECB, they ended up hiking rates right before things fell off a cliff. This time around, I think they were anxious to show that they're credible on the inflation front, and they're serious about what they do. They raised rates, but now I think they have the benefit of growth slowing down in Europe. You can see the beginnings of that starting to pick up a little bit, and a lot of the transitory elements in inflation are coming down, which will help them with the inflation measure that matters to them. So I think the need for them to hike going forward is not nearly as strong as it was in the past.
So does this mean then that there's a window of opportunity? I mean, how long does this last?
Well, I don't think the monetary policy stance matters enormously, apart from the signaling component, for what happens in the peripheral countries. They're not borrowing at that rate, right? They need to fix their fiscal affairs. The main issue in Europe is fiscal and debt related. So the monetary authorities play a role in coordinating a lot of the efforts to solve the problem, but monetary policy in and of itself can't really solve it.
All right. Thank you very much, Mark Dow, Pharo Asset Management. Appreciate we've got more with Professor Robert Mundell, Nobel laureate, professor of economics at Columbia University.